We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. Well, what's happening? It's been increasing over the last 50 years since the government has been. Hey guys, what's going on? Jebb here, and in today's video, we have some very exciting bullish news. As you guys know, we have been looking at inflation data for the last 5-6 months. As you know, inflation has been creeping higher and higher, and last month, CPI, including food and energy, came out at 9.1%, the highest that we had seen in 40-some years. The last time we saw inflation this high was in the early 80s, and we just saw it hit 9.1 year over year 1 month ago, but that data has now updated for the month of August on August the 10th, 2022, which is today. Came out an hour and 31 minutes ago at 8:30 a.m. Eastern at, you guessed it, no, you probably didn't. Actually, you may have. 8.5% instead of 9.1. It was forecasted at 8.7. Core inflation traded sideways, 5.9, with 5.9 coming in this month as well. Core inflation being all of the CPI data, less food and less fuel costs and energy. So what we've seen happen here is extremely important. This is going to be the most important show that we've done in over a month, and is probably going to be the most important show that we do for a while, because this inflation data signals the turnaround, the top, hopefully the end of the era of rising inflation month over month that has been leading the Federal Reserve to 75 basis point rate hikes, which they haven't done since the 90s. It's been leading the ECB to massive rate hikes that they haven't done in 22 years. The Bank of England to massive rate hikes. If inflation around the world, but especially in the United States, gets under control and starts moving to the downside, as a result of rising interest rates, as a result of the supply chain smoothing out, now that we've adjusted to the new normal post-pandemic and post-war in Ukraine. If this is the new normal and inflation is starting to come back down, then the Federal Reserve can step in and stop raising rates at 75 or 100 basis points, as they may actually end up doing next month. But they can start having lower interest rates, which would be ridiculously bullish for Bitcoin, because the institutions would be able to get money cheaper on credit, use it to invest in Bitcoin. As of this morning, as of an hour and a half ago, Bitcoin has already jumped from where it was trading at 8 a.m. this morning, just 2 hours ago, at 23,000, all the way to 24,000. Bitcoin's up 4% in an hour. Ethereum trading at 1850. Massive day for Bitcoin. Tim's not going to be here today, but Tim actually told me on the phone today that because of this news, we could potentially see a $30,000 Bitcoin in the next week. And we're going to be jumping into this story of inflation, a couple of other stories, and the technicals on Bitcoin, because this could be the signal that we needed to signal that a bull market could be starting relatively soon. Huge day, really excited for it, and we are joined, as always, by none other than the one, the only, the T-Shroom. How you doing, T-Shroom?
I'm doing real well. Some might say I'm doing better than I deserve. I wouldn't say that, but some might. But some might say that.
I wouldn't say that. I think you're doing good, and you deserve it.
Thank you.
You're welcome.
I appreciate that.
You're welcome. And that's because you got a great market pulse coming up for us in a little bit.
That's right. I most certainly do.
Yeah, teasing the rest of the show as if we don't do it every time. But we're also joined as always by Smay.
So I have a question.
You have a question?
You just assumed that meant he was doing good. What if he deserves better and he's
maybe you're doing worse than you deserve. Yeah, what about that?
Well, no, not that he's doing worse, but like maybe he doesn't deserve a lot and he's doing just slightly better than that.
But that's pretty low. Yeah,
that's pretty low.
I'm lost in all the negatives and the positives. I just know that.
See, today's not Positive Friday, so actually, guys, we're gonna make a new tradition. It's Negative Wednesday.
No, it should be
wishy-washy Wednesday.
Wishy-washy Wednesday.
But I actually think I'm a little positive right now.
You're a little positive.
Good.
So
I'm a little positive.
Joke was I was being a little wishy-washy.
I'm a little positive, but luckily inflation is negative, and we're also joined as always by, well, not as always, but by today, by Kelly, who will be tuning in a lot more in the second half of the show, who will be helping us talk about the negative inflation numbers. Kelly, how are you doing?
I'm feeling agnostic but data driven. But who am I kidding? I'm a human. I've got feelings just like anybody. But I'm excited about this green candle. We're going to talk about what it means, and are we going to continue going?
Agnostic towards the markets. That's a very interesting use of that term. I'm very excited to hear what you're going to tell us about this inflation data. Guys, I remember I was sitting on the front porch of my father-in-law's house at 8:31 this morning, and I was like, I need to check this data before I leave. Checked it, saw 8.5, and I jumped up. I was so excited. This could be the big turnaround that we need in the Bitcoin and cryptocurrency market, as the headwinds of crypto are starting to die down a little bit. We're starting to get a little bit of a tailwind having to do with the price and And finally, we have some really bullish good news. Not just a little bit, but some very good news. And we're very excited to jump into that today. We're going to start off with green names.
Okay, good. I got a little nervous. I was gonna say if I had to bring the boat back, kind of like an institution.
Oh.
Also, I would like to note, I feel like my price prediction yesterday aged really well.
It did.
Did it not? Because even my reasoning was exactly what I said, that I thought the inflation report was gonna come in lower than people expected, and now look at how.
I was just thinking, we've seen gas prices drop so much in just the last month that it had to either be a same or a beat. And luckily it was a beat.
So shout out to JT Skinner.
Shout out to JT Skinner.
He believes in me. He's one of the only people in the chat that believes in me at this point. But I would like to read some green names in honor of that victory that I'm going to sweetly
Apparently you read some gray names if they're on your side. That sounds like a bias, Smay.
That's good.
Anyways,
that's a good point, huh?
Anyways, so we got Elliot Locke. We got Mitch Shaw. We got Crypto JMP. We got Adam Rourke. We got Matt C. We got Tyler Main. We got Eric Ward. We got Agent Gold. We got Kevin Grims. We got Mike Lowry. We got Michael Payne. We got my eyes are just not working today. Dr. Fuzzy Eyeball. We got Philly Fan 61. We got Win People.
I feel like you have to read these in a really southern accent considering you got the straw in your mouth.
We've got Tristan Williams.
There we go.
And Colin McDonald.
We
got Brad Geidel, and we got Justin Eubanks. We got Kevin Grims again. We got JoJo.
Yeah.
We got Mitch. We got Gia S. We got who else we got here? We got Samuel Bryan. We got the Mellow Fellow.
Did that horse kick a tree far from
I don't know if I can handle these T-shroom noises.
No.
And then we got Michael Payne here says.
What sound does wheat make? Okay. Well, Smay.
Yes.
If crypto for some reason doesn't work out, are you going to hedge your bets in farming?
What?
It's supposed to be a segue for the hedge ad.
Whoa, guys.
What do you mean what?
Guys, let me tell you something. Hold on. All right. We're gonna, all right. You know what I like to do on a nice warm summer evening?
What's that, Smay?
I like
Sit
to
on your porch swing.
I like to sit on my porch, smoke a nice stogie, and watch the sunrise in the west. I'll tell you what else that means for me.
Since when does the sun rise in the west?
In my world, it rises in the west. I don't know my wests and easts. Anyways, what I'm trying to tell you is, can I just get through this ad, Jeff? What I'm trying to tell you is, I get to do that because my life is funded by my cryptocurrency investments. Now, what I'm telling you about that is, would I be able to sit on my porch if I was over there on my computer, logging into an exchange, putting in a buy order for cryptocurrency, paying those exorbitant exchange fees? It is absolutely ridiculous. I'll tell you what. Anyways, guys, what I'm trying to tell you about here is Hedge, the greatest company in crypto ever made. And I'm telling you guys, it lets you literally just sit on your porch, smoke a stogie, have a little bit of whiskey, watch the sunrise in the east.
So you're drinking whiskey when the sun is rising?
Well,
whiskey in the morning, Smay. Come on, dude. This is who you're getting your investment advice from, guys.
It lets you just sit there and
Coffee
let your
and
cold
cocktails,
wallet.
That's the new show.
Because you know what a cowboy loves? Self-custody. Which means you guys, you can let your cold wallet get filled up with cryptocurrency. You don't even have to touch it. I'll tell you what, Hedge is a bygone good old company there. And I want you to check it out. Link in the description. Guys, I'm telling you guys, you're not going to regret it. Get your cold wallet filled up at these low prices.
And on the next episode of Bonanza, we're going to go sell 1,000 head of cattle at the market. Anywho.
I feel like these ads are getting longer every day.
They are.
All right. Well, back to you, Jeb.
Boom. Make sure to get hedge.io with a link in the description box down below. By the way, T-Shroom, you have a market pulse for us, so why don't you take it away?
Yes, I do. I'm going to start that market pulse off with a tweet from none other than @tshroom. You're going to want to check that guy out. But he posted a poll, and that poll was correct that the inflation numbers were going to beat. I'm going to start off with something we haven't done in a long time, but something we used to always do, and that is the coinmarketcap.com. And Bitcoin is up 3.24% on today's news, and Ethereum is up almost 7%, up 10% in the last 7 days. Let's see what is up in the last 7 days. So Celsius up 77%, Flow up 54%. I believe that was on Facebook metadata. So Flow has a new partnership with Meta, as we covered. Near Protocol up 28%. This is all in the last 7 days. Avalanche up 23%, almost 24%. So seeing some good blood flow back into crypto here consistently. On the 24 metric of consideration, Lido has been on the top of the charts here, and you can see with your eyes the rest. Ethereum is in the top 10 of the 24-hour price surges here, as it's up again 9.41 in the last 24 hours. So we'll move on. We've got some good stories here, but first, if you haven't heard, somehow in U.S. inflation, headline inflation beat its forecast, coming in at 8.5%, forecasted at 8.7%. And coming down from its previous 9.1. So this is really, really good news. We're going to talk about this at length in our discussion later on. But first, let's get into some stories here. So stablecoin giant Circle and Tether back Ethereum's merge, a bad sign for those pushing a hard fork. Circle, the creator of top stablecoin USD Coin, wrote in a blog post today that it intends to fully and solely support the Ethereum proof-of-stake chain post-merge. Soon after, Tether, the entity behind another popular stablecoin, USDT, also published a blog post titled USDT Supports ETH Proof-of-Stake Transition, detailing how Tether hopes the merge will not be weaponized to continue to cause confusion and harm for the Ethereum ecosystem, its applications, and its investors. So, in a clear takeaway here, no one in ETH community, apart from miners, want to stay on proof of work. The Flashbots strategy led and research collaborator at Paradigm knows as Hasu tweets over the weekend. This fork chain will be a great giant retail trap. Miners, exchanges, traders are all trying to talk it up for their own self-interest. So if you haven't been tracking, there is a hard fork proposal that has been brought forward, and everybody's pretty much against it except for miners who've invested a bunch of money in GPUs and ASIS to be able to mine Ethereum, and their hardware is going to be a lot less valuable soon. But that's great news for gamers who can buy GPUs again. And the stable coins are kind of throwing their weight behind the fact that they do play a big role in the industry, and they're not going to support any Ethereum from the proof of work after that transition happens sometime in September. So pretty interesting news there. This isn't the first time that an institute, I think it was Chainlink. Yeah, Chainlink either yesterday or the day before said that they were going to also they were not going to deny service, but they weren't going to service a proof of work Ethereum fork. Coinbase betting big on staking ahead of the Ethereum merge. So everything kind of orbiting around the Ethereum merge here in our market pulse. Any given quarter, it could be up or down, he said, the crypto market on Coinbase's most recent earnings call. It's important to distinguish between what is in our control and what's out of our control. That quote, of course, coming from Coinbase CEO Brian Armstrong. The trading volume on Coinbase fell over 50% when compared to the same time, the same quarter from a year ago, down 217 billion from 462 billion. Right, so pretty big change there. According to the letter, and this is a letter to its shareholders. According to that letter to Coinbase's shareholders, the exchange considers its staking product to be an early win for the company. It also mentions that staking is one of Coinbase's prioritized products with a long-term goal of becoming the #1 staking provider among companies involved in crypto. Coinbase offers staking rewards for tokens including Ethereum, Algorand, Cosmos, and Tezos. It added Cardano to that list in March, along with Solana in June. In the second fiscal quarter of this year, Coinbase said 67% of its monthly transacting users engaged with non-investing products offered by the company, which includes staking. So Coinbase is seeing what they want to see, and really coming out ahead and saying that their staking services are ahead of schedule, and kind of it's an early win. As we know, Coinbase has been really struggling in the news as it has been sold off by ARK Investments. I believe it was its third largest investor, Cathie Wood, in my opinion, kind of notoriously selling the bottom there, but for somewhat good reason, because the SEC opened up an investigation into Coinbase, saying that they were basically a platform for unregistered securities, and because they had some insider trading going on there. But that's all trying to be put into the shadows here by the CEO, Brian Armstrong, as they try to take focus on something that they consider more important, which is their early win in staking. Well, that wraps up our market pulse. We're going to be talking much more about inflation coming up in the discussion. But Jebb, did you have any thoughts on any of these stories before we go into TA?
The thing to look at here, guys, while he was talking and breaking down that story of staking with Coinbase, I was looking at the last 4 quarters of earnings for Coinbase, and you can see over here, I have them up right here. You have the EPS, that's earnings per share. You have the quarter, which is Q2 2022, that just came out yesterday. Their revenue, they missed by quite a bit. They've been missing revenue quite a lot, their expected revenue, except for in quarter 4 of 2021 when Bitcoin and crypto was doing very well. You can see the reported earnings right here. Or reported revenue, right here. In quarter 3, 2021, 1.31 billion. At quarter 4, 2021, 2.5 billion. Got cut in half in quarter 1. If you guys don't know these numbers, you really should, because Coinbase is one of the largest companies in crypto, one of the first big customer-facing companies that went public in the cryptocurrency industry. And its earnings really tells us a whole lot about the state and the nature of the market. Them losing over half of their earnings in this quarter, going from quarter 4 to quarter 1, shows the state of the market. Quarter 2 earnings came back down 35% from what they expected from quarter 1, sitting at 800 million. Coinbase is getting hit really hard right now, and that shows you the state of the market. But what this also shows you is that as Coinbase's price has been going down, and we use this to enter into our technical analysis, as Coinbase's price has dipped substantially this year, that gives opportunity for investors to invest in Coinbase, the company, and also in Bitcoin, the coin that Coinbase is built around. So the thing to keep in mind is that Coinbase is a stock that follows Bitcoin very closely, and through Coinbase, a lot of different companies, hedge funds, investment firms, sovereign wealth management funds, all these different funds are able to actually kind of get into Bitcoin a little bit by buying Coinbase, because Coinbase seems to follow the crypto market quite a lot. Right now, it's following it to the downside, but there is a good reason to believe that so long as Coinbase doesn't forget forget its actual business model and start going off in some random direction that maybe BlackRock would lead it in, then it will probably rally quite a bit with the Bitcoin rally. The good news with Coinbase also is that despite these earnings, they are down a little bit on the last couple of days, but Coinbase has actually rallied from $50 or so all the way up to $117 in just the last part of July on into August, up 119%, a little bit after Cathie Wood sold, unfortunate. But the point is, Coinbase is looking pretty solid. Coinbase generally reflects the market sentiment of Bitcoin, at least its stock does, over the last year and a half since it IPO'd in early 2021. That's good news. But let's go ahead and take a look here at Bitcoin. And here in about 10 minutes, I'm going to bring Kelly in. I want to get his take on some technicals as well. But I want to kick us off by looking at BTC, because as you guys know, Bitcoin has been in a relatively stable rally over the last 3 months, ever since the end of June, the last 2 months or so, ever since the end of June when we bottomed out at 17.7. Pretty dark, gloomy time in cryptocurrency. If you remember, this is back when Terra Luna collapsed. We lost $80 billion in valuation, or $60, $70 billion in valuation between Luna and UST overnight. We saw Luna drop from its all-time highs and where it was trading at the time, down to basically zero, completely collapsed. We lost tens of billions of dollars in market capitalization. From there, a bunch of different investment companies and lending companies that were heavily invested in Luna went belly up. You saw 3 Arrows Capital disappear, a lot of drama with Celsius, a bunch of different companies going through a lot of pain, which led to a lot of investors getting scared from entering the market because they lost a lot of their funds. And so Bitcoin was in a very dark place. Now that that has ended, those headwinds have started to retract. On top of that, the conflict in Ukraine has continued. However, global coverage of it has subsided a little bit. So it's still a terrible thing. I in no way want to mince words there. What's going on in Ukraine is horrible, and I pray that it stops immediately and people stop getting hurt. I do pray that. However, the global coverage of it and the FUD coming from it has started to subside a little bit. It still has major impacts on humanitarian, humanitarian needs, most importantly, but also on economic factors. But as far as the FUD that was driving a lot of drops in the market, that FUD has kind of let up because the media has moved on to something else. So at least for that, that is a bullish thing for crypto because some of that bearish pressure has let up. Again, we're talking about market forces, not about the horrible humanitarian disaster that's going on in Ukraine. That is obviously a travesty. My point is a lot of the headwinds that Bitcoin was facing have started to let up. And also, so that means that one of the last big headwinds that we need to look at is the interest rates rising. As you guys know, the Federal Open Market Committee meets every month or two, and they decide on whether or not the effective federal funds rate, which is the actual term for what they are deciding on, is going to go up, stay the same, or go down. They've been raising it 75 basis points or 0.75%. Every meeting for the last, I think, 2 meetings. Before that, they were raising it 50 basis points. And if we had seen inflation come back at the same or above what it was, then we would have probably seen 75 or 100 basis points come September, late September, when the FOMC meets again. However, CPI data came back at 8.5%. It was forecasted at 8.7%. And as you can see right here, last month, it was reported year over year at 9.1%. 9.1% means that between June of 2021 and July of 2021 and July of 2022, inflation was sitting at 9.1%. That has to do with a bunch of different factors that we'll discuss in a little bit. Point is, we beat that. We went down 0.6%. That is extremely, extremely important because as you can see, if we are actually not seeing a little fake out like we did here in January, February, March of 2022, where we dropped a little bit and then kept going up. But if this is actually peak inflation that happened last month and we're starting to go down, that means Jerome Powell and the Federal Reserve are probably going to come out and they're going to start looking at plateauing interest rates or actually dropping them and turning that printer back on in the future. Going to get to all of that in a little bit in the discussion with Kelly. The point is, a lot of the headwinds that Bitcoin was facing are starting to let up. The thing to keep in mind is that a lot of the reason why Bitcoin is down so much is because the bears have been so oppressive and the bears have been getting their strength from all of this bullish fundamental news. All of this fundamental news that's bearish that's causing the market to drop. It's not so much that the bulls are weak, although that is true. It's that the bears are so strong. So when the bears start to lose some of their strength because the headwinds that Bitcoin has been facing, this bearish pressure from the economy, from conflict in Europe, from inflation, from now the housing market's in question, from global supply chain issues, from food shortages, all of these things start letting up one by one. That's a really bullish thing for the economy. That's a really bullish thing for the cryptocurrency economy. So what we're seeing right now is that Bitcoin is in a short-term decision point that can help dictate a long-term trend movement. So let's take a look at what we're seeing on the hourly chart. As we've discussed many times on the show before, we're currently looking at a triple top forming with a rising trading channel. That indicates that we're in an ascending wedge, and if we break bullish out of this, that indicates that we're in an ascending triangle pattern, and if we break bullish above this resistance here at 24K, we'd probably rally up to about 25.5, and that would mean that we're continuing in this rising wedge. This could mean that Bitcoin could rally all the way to $30,000 within a week. That's what Tim texted me this morning. It's not an official prediction. That was just kind of off the top of his head kind of thought, but I'm inclined to agree with his analysis. We could see Bitcoin pushing 25, 26, 27K in the next couple of days, at least in the next couple of weeks, as inflation data indicates that the entire economy could be shifting away from an economy that's struggling with inflation to an economy that is recovering from a period of inflation. The trillions of dollars that have been printed have largely started to spread throughout the economy. The economy started to enter this new normal after the pandemic era that began in technically December of 19, but really March of 2020. What we're seeing right now is that Bitcoin is starting to get used to the new normal. And under some state of normalcy, that's when Bitcoin is able to go through a massive rally. Eventually, Bitcoin will be one of the sectors, cryptocurrency I should say, will be one of the sectors that drives the global economy. I do believe that that's true. I interviewed Kevin O'Leary last Thursday on on Cointelegraph's Market Talks, and he said over there that cryptocurrency is the 12th sector of the S&P 500. Couldn't agree more. This sector, which is cryptocurrency, is going to lead the global market. However, right now, it is very much oppressed by bearish news and it's very much uplifted by bullish news for the market. When we were printing money out our ears and we were just printing trillions of dollars, a lot of that money flowed into crypto and we saw Bitcoin rally dramatically. As we've seen massive geopolitical headwinds, crypto has dropped dramatically. That's why we look at fundamentals so much on this channel. Now that some of those fundamentals are looking like they're going to let up and turn from bearish back into bullish, kind of like what we saw back over here in the last part of 2020 on into early 2021, we're likely going to see a turnaround in Bitcoin and crypto in the next 6 to 12 months. If we do see interest rates come out at 50 basis points instead of 75, and that indicates that the Federal Reserve has hit peak interest rate hiking, and they're not going to go to 100 basis points, and they're probably done with 75, you will probably see Bitcoin jump to $30,000 at least very, very quickly. So in the short term, be on the lookout for this rising wedge that we're in right here. Be on the lookout for this ascending triangle pattern, because a breakout to the upside could be coming in minutes, hours, or days. And if we do start pushing up towards previous resistance around $25,000 to $26,000, then guys, that could be the catalyst that we need. Also, one thing, don't forget, Ethereum's in the same position, except it has actually, in a way, technically broken that trend line that it was below yesterday. I talked about yesterday how it's at a really important decision point here. If Ethereum starts breaking up towards $2,000, Ethereum does have the power behind it, especially with ETH 2.0 coming up, to push on to 2,000, 2,200, 2,400, 2,600. If it does that, it could lead the altcoin space on a tear, and if it leads the altcoin space on a tear, then that could lead Bitcoin towards going back up to 25, 26, 27K. All of those things would lead to bullish buy signals on, for example, Lux Algo on the daily chart for Bitcoin, probably also on the 2-daily chart and the 3-daily chart, and maybe even on the weekly chart if we're able to get up to 35K or so. If those things come into play and we're able to see Bitcoin rally another $5,000, Ethereum rally another $600, $700 as a result of this news, Ethereum 2.0, another bullish inflation report, which will come out in about a month. If that occurs, if we see inflation come back at 8.1% or something, it's going to be huge. And then if we see the Federal Reserve raise interest rates 50 basis points instead of 75, guys, you have a perfect storm forming in late September, early October, where you could see Bitcoin blast off, and it could be the beginning of a new bull market. So this is very preliminary. There are a lot of bullish factors that are lining up. Like I said, there's bullish inflation data right now. A month from now, we could see even more bullish inflation data as gas prices are expected to continue going to the downside. We're going to talk about that in a second. Ethereum 2.0, we think, is actually going to go well this time. And then we also have the potentiality of interest rates going, the hike being lower this time than we saw as 75 basis points last month. Those four factors wrapped together, so long as a black swan event doesn't happen like war in the South China Sea, so long as those four things go off without a hitch, that is a perfect storm. That's the catalyst we've been looking for, and that could lead to the beginning of a new bull market, not in a massive explosive way, but in a slow, gradual movement back up towards $69,000 over the next 18 months. That could begin within the next 3 months. Really excited to see what those next 3 months are going to hold. But I also want to throw it over to Kelly for a little bit of technical analysis and on-chain analysis. And then here in probably 5 or 10 minutes or so, we're going to jump into our discussion segment and really dive into this inflation data and what it means. Kelly, how are you doing, my friend? Welcome back to the show.
Oh, I'm doing great. And thank you so much for having me. And I couldn't agree more with everything you said. And I really just want to impress upon everybody right now, caution. That doesn't mean that this bullish movement isn't good. It just means that in order to make money over time consistently, you have to practice risk. You have to have good risk management. And so the reason I say that is, yes, the candlesticks are breaking green right now. If you're looking at a 15-minute chart or a 1-hour chart, 4-hour chart, you're getting a little bit of movement. But just as you just showed, it's still well within structures that it hasn't broken out of yet. So I'm just going to cover a few things on charts, and then we'll get into the discussion. So first thing I want to show here is, you can see right here where this arrow is. This is right when the CPI report came out. And yeah, we have very strong bullish rocket ship up here on the 15-minute chart. But one thing we need to contend with and make sure that we're paying attention to is there's very regularly in markets retracements to test the resolve of a movement. So if this were to retrace from here and not just be a bull flag or a bull pennant, then this line right here, this is basically the fib retracement golden pocket right here. And this lines up perfectly, not only with this sort of critical level, as you can see right here, but also if we put on the Bollinger Bands, for those of you that have gone through Club DeFi and gone through the technical analysis course in there, you know that this center line right here is a 20 simple moving average. And look at right where this is. So there's a lot of confluence in this area. If this were to come back, the reason I point this out is, if we do have a bullish continuation from here, this would be a very healthy point for the price to pull back to. So if this just, crashes down to this level and bounces, I don't want people just to jump out of their positions just because they're seeing a downward movement. If you break these sort of levels here, that's when you start to get worried. And then of course I can come out to a larger chart here on let's go to the 6 hour. Coming here on the 6 hour, we could see, as you pointed out as well, we're still well within this structure. And this 26K is incredibly important. 25 to 26 is because it's right here at the top of this resistance level, as well as being the fib retracement from this move right here. And so there's a lot of resistance above us, not to mention this major macro support that we had here, as well as this macro resistance, which is right in confluence. If we did push straight up from here, this is a huge headache in terms of for the bulls to get through, because we have this massive downtrend of resistance as well as this macro resistance region. Not to even think about getting above that. We're still not considered in a full reversal until we get above this golden retrace right here at this 42,000 level. I do think though, if we do break this macro resistance, which is basically 30,000 to 32,000, if we get above this, we're going to have a lot of sort of sentiment shifting coming in. So there's going to be a lot more steam coming into the market. Now, considering where that steam comes from, this is a chart from a Titan of crypto, which essentially points out this is the USDT dominance. This is very similar when we're looking at the Dixie for traditional markets and Bitcoin, but this is when money is moving out of Bitcoin. Typically people in Bitcoin, the majority of people, when they move out of Bitcoin, for safety reasons or risk management or whatever, they're doing so into stable coins like USDC, USDT. And so you can see as the dominance is going up on USDT, you also see the price falling, and then vice versa. When this tops out and starts coming down, the price comes back up. And we basically found a bit of at least a local top right here. And this has been coming down, and this hasn't yet had the full fuel that we're looking for, but this is starting to provide that sort of fuel, which means this is essentially what Will Clemente calls dry powder. This is money sitting on the sidelines, still within the crypto ecosystem, ready to be dumped into crypto. Now, the next thing I want to show is this is very similar. This is the Dixie, and we have broken out of this fairly long sort of up structure support level. And so this doesn't mean we're absolutely going to go down from here. This doesn't mean the Dixie is absolutely going to go down from here and rocket markets, but this is starting to show signs that it's possible. And the only other thing I want to just reemphasize is you see these drops right here. When structures break, this falls very quickly. When this breaks, falls very quickly. So this isn't necessarily considered a bear flag because this is longer than the pole. However, there's still a lot of resistance above us. And just because we printed a CPI number that's a little bit lower, we still have a lot of work ahead of us for before we can really confirm that we're in a bull market. So as exciting as this is, as exciting as this movement is, we still have these at least local levels that we need to break through before we can even consider that we're actually starting a full reversal. Because right now we're just in a pattern that's still a bearish pattern because this is an ascending channel. So we just need to be very, very cautious about what we're doing. And I even pointed that out right here. This mildly lower CPI print does not mean all systems go for the bull market rally. This is just some systems go, but we have a lot of work to do. And with that, I'll throw it back over to you and we can hop into our discussion and talk about what all this means.
Absolutely. I really appreciate it, Kelly. Always a pleasure having you on the channel. You and I have a lot more discussion to jump into. Why don't I just bring up some of the data first and foremost so that people know what we're talking about. As you can see over on BLS.gov, that is the Bureau of Labor Statistics. That is the U.S. government entity that prints the economic data such as CPI that we are looking at. You can see this updated this morning. All items, which involves all major categories, CPI came back at 8.5%. Last month, that was 9.1%. As you can see, I have it up over here on dailyfx.com/economic-calendar. You can see inflation data was 9.1%, coming back with a forecast at 8.7%, came back at 8.5%. You can see over here, a big part of the reason why we're sitting at 8.5% is because food is sitting at 10.9%, and energy, despite the drop in gasoline prices and despite the drop in natural gas prices and some of the other major commodities in that area, is still sitting at 32.9% year over year. This is what I'm talking about when I say inflation is really not you know, 5, 6, 7, 8, 9, 10%. Is really probably more like 20 or 30%. You look at things like energy up dramatically, but also keep in mind, energy is up dramatically on top of an inflated US dollar. So there's actually two components there. You have the inflation of the US dollar changing the valuation of what the underlying currency is, and then the price is going up as well. So you have compounding inflation, which is one of many reasons why I say that inflation, CPI, is a ridiculous statistic and doesn't really reflect what's actually going on in the economy. That being said, it is the number that all decisions are made based off of within things like interest rates and what the government uses. So we have to look at these numbers in relation to each other, but not as absolutes. It is not absolutely true that prices have raised by exactly 8.5% in the last 12 months. What is true is that comparative to what we were looking at 12 months ago, prices have risen 8.5%. Now, this is the number that you really want to look at. This says major categories. This is what people talk about when they say core CPI. And if you go to BLS, U.S. Bureau of Labor Statistics, just type in BLS CPI into Google. It'll be the first thing that comes up, CPI home. You're going to see this website right here. This is the chart you're looking at. You want to hit read more. And then this is going to give you the chart of energy, food, all items, less food. You can click in here, see energy commodities, energy services. You can click in here, see gasoline, for example, up 44%. Fuel oil up 75%. If I'm not mistaken, that also includes things like aviation fuel, you know, oil tanker fuel. I could be wrong on that, but it's talking about gasoline, natural gas piped over here, 30%, electricity up 15%. These are the things to look at. Then we look at major categories. We have commodities less food and energy commodities, then services less energy services. You can see that they're sitting at much, much lower. Well, the cool thing is if you show the table, then it's going to bring you over to what I have up here, and this shows the inflation based on the different items. So you can see fruits and vegetables up 9.3%, non-alcoholic beverages and beverage materials up 13.8%. Don't need to go into all of this. The point is you can see all of these different places that you can zoom in here on that table. See like new vehicles up 10%, tobacco and smoking products up 7.7%. If you really want to drill in here and see some of the major changes in the inflation and what parts of the economy are really struggling and going up. Airline fare up 27%. Natural gas piped up 30.5%. That's a big deal. Food at home up 13.1%. This is a number that really heavily impacts the average American. The reason I say American is because obviously CPI refers to the American economy. If we look at energy commodities, up 44.9%. Energy up 32.9%. Fuel oil up 75%. Gasoline up 44%. These numbers are where that 8.5% is really coming from, because all of this gets averaged out and then it prints out the number that you see right here, which is 8.5% all items. Part of the reason why I want to bring up this calendar is that what I really need you to understand is that inflation rate includes all of these energy and food items. Food and energy are sitting up 10.9% and 32.9% respectively. I'll go back over here so it's a little easier to see. Food is up 10.9%, energy is up 32.9% in the last 12 months. That means that when you bake that into inflation, inflation is higher than 5.9. It's actually sitting at 8.5. The tricky thing is, core inflation, which is all items less food and energy, is sitting at 5.9%. So while food inflation and energy inflation is slowed down, if you look back over here at this table, all of the things that are not food and energy, like apparel, new vehicles, used cars and trucks, shelter, rent of primary residence, owner's equivalent rent of residences, medical care services, airline fare, all of these things that are baked into CPI data have not really changed all that much. Individually they have, but this cumulative number of 5.9% has actually stayed the same. You can see it over here on dailyfx.com. Inflation rate core inflation rate year over year in July was sitting at 5.9%. It was forecasted to go up, but it actually just plateaued at 5.9%. That's what Kelly's talking about when he says that we really are at the very beginning of something and we want to be hopeful, but we don't want to get too excited, because what's really driven the inflation rate down is gas prices have gone down. Plain and simple. The rest of the economy has not really slowed down inflation all that much. Gasoline prices have gone down due to crazy high prices, lowering the demand of gasoline. Also due to the fact that the Russia-Ukraine conflict has been going on for about 6 months now. The global economy has started to adjust to that. Oil production in other nations that are more friendly to the West have increased. Same thing in the United States. Oil capacity, oil stocks in the United States have gone up quite a lot, meaning that we have more of a cushion for price fluctuations. A lot of this inflation drop, because it includes gasoline prices and other fuel prices that normally Russia would be exporting, but now we found other sources for, the economy has adjusted to that, and that number has come down. Core CPI is what we really want to see start coming down, because that includes the everyday consumer items rather than just massive bulk items like gasoline, fuel, natural gas, energy, electricity, all of these different commodities that are very important, but nonetheless very much impacted by one geopolitical event. We need to see inflation come down in the core sector, in the core areas that CPI is measuring. What this means is that we're looking at very bullish data, which is that inflation has decreased. That being said, it's still 8.5%, which is still nearly 40-year highs. We're starting to see a trend in the right direction on inflation in general, but we have not started to see an inflation in the right direction on core CPI, which is what we really need to see. That's why next month, when the next drop is, which I can pull it up really quickly. I don't know the number the date off the top of my head.
September 13th.
September 13th, that's right. It actually says it right here, to be released on September 13th. When that data comes out, that's going to be really important, because a week after that data drops, the FOMC meets to raise interest rates the same amount, or decrease the raise, or increase the raise. Depending on what that CPI data comes back as is going to really dictate what they do. If we see that it trades sideways, and we see that, okay, core inflation is still at 5.9%, inflation rate is still at 8.5%, or even if it drops down to 8.1%, but core inflation is sideways, the Federal Reserve is going to say to themselves, okay, well, we've gotten the inflation under control. It's not going up anymore, but we still want to get it to come down, so they're probably going to go forth another 75 basis point hike. If it actually goes higher, as it has done in the past, it went down one month, then up a lot the next month. If that happens, 100-point basis point hike is still very much on the table. So you really want to be looking at September 13th to confirm this movement, because this is very preliminary. So Kelly, I'd love to hear your thoughts on this. Obviously, this is very early. Do you think that this is actually as bullish of news as we thought it would be, considering core inflation hasn't gone down but just plateaued?
Well, first thing I want to address is a comment in the chat, which I just want to point out is how interconnected the world is. Somebody said, come on, guys, Russia doesn't export oil to the U.S. Well, if they're not exporting oil to the U.S., but they're also shutting off the pipelines to places in Europe, where are they moving their purchasing to? Right. So then that creates demand in other areas that then affects prices globally. So all these things are interconnected. And what you said about all the data you just pointed out is beautiful, because we all need to realize that it's not just the price of gas going down. I kind of think of it like being in traffic or sitting at a light. When the light is green, when the light turns green, not all cars start going at the same time. The first car starts going, and then consecutively after that, and you get this sort of zipper effect where it expands slowly over time, and then everybody's moving at the same speed. And if somebody comes up on an obstacle in the road, one car brakes, and then the next car brakes, and the next car brakes. That's what happens when you have price fluctuations in the global market. So right now we have gas prices coming down, but one of the reports I read is that we still have incredible demand or lack of supply, which I don't understand how that really happens. I think it has to do with BlackRock buying houses and other institutions and corporations and banks. But the housing market still has an incredible demand, and those prices haven't come down. So some people are worried that there could be a housing crisis, but I do want to point out a key fact that we discussed at length with Caleb Franzen, he's one of the guys that I've had regularly on my Crypto Answered and brought him here to the Jebb channel. We were talking about, what effect this is going to have on the housing market when those prices come down. Is there going to be a collapse? And it's important to recognize that in 2008, the collapse happened not because of inflation or this or that. It happened to do because of subprime. And we don't need to go into what subprime mortgages are. But essentially what happened is you had a lot of people that didn't have the appropriate sort of requirements, not to limit people from getting houses for bad reasons, but you need to make sure if somebody gets a mortgage that they're going to be able to pay it. And when you have all these subprime mortgages, which we don't have now, we have, I think over 70 or 75% of people that are buying houses right now have over a 700 credit score. So when prices come down, I really looking at the housing market, we have this huge bubble that was created due to this bizarre sort of scenario globally from the pandemic and the crisis in March of 2022 that's perpetuated, that all of a sudden people were changing where they're moving to suburban areas, and it created this housing bubble in these suburban housing markets. But then when people moved back, then that created a housing bubble, like rents in New York basically doubled since 2020. And that's because all these people coming back in. So we need to have the housing market come back under control. And in order to do that, There's going to be some things that are beyond the prices at the gas pump, beyond the prices at food stores, restaurants. So I do think there's still a little bit of a gray area about what's going to happen, and we need to protect ourselves because we have not broken any critical levels. And I'll just show very briefly on my chart here. I have essentially, exactly as you pointed out, we've come down 30%. This is oil right here. This is oil, the crude oil index. But we're sitting right here at this sort of support region where we had not only this interaction with price action, but also support here. But then directly below that, we have this massive sort of support from this previous major resistance. So oil very well could rebound, because we have to consider it's not just oil coming down because of global markets starting to meet the demand with supply, but there's also a lot of oil reserves in the U.S. And U.S. is among the largest oil producers globally, which a lot of people don't realize that. They think it's all in Arab countries and in the Middle East, and it's not. We have one of the largest oil productions here, and there's a lot of reserves that are being tapped right now going into the midterm elections to bring the gas prices down. So this very well could rebound here in a month or two. And not only that, yes, we have the Dixie coming down, but these are very bearish structures that we're in, and we're trying to fight back into that. But just supports my narrative of my thesis of what I was talking about before. There's a lot of work to be done before we can really say that the markets are going to rebound, because inflation, we have a 0.2% down on CPI right now, but we have a lot of work to do between now and September 13th, and then the next FOMC meeting on September 21st and 22nd.
So let me ask you then, Kelly, because obviously, like you said, we could see oil bounce in the next month or two, and we could see it go back up to $4, $4.20, $4.40 nationally. We could see things like, if we throw in a cryptocurrency factor, we could see a delay on ETH2. We could see a lot of these factors that are coming into this kind of, catalytic event at the end of September be thrown off. Do you think that the interest rate hikes that the Federal Reserve has been implementing over the last 6-7 months have actually started to get inflation under control? Because if you look at my chart really quickly here, I have it up over here. The United States core inflation rate hit a local top at 6.5% in March of this year, and it's gone down to 5.1. Now we've reported 5.9. Now it's traded sideways at 5.9, indicating that drop could be slowing down. We went 6.5, negative 0.3%, negative 0.2%, negative 0.1%, negative 0.0%. So we've been asymptotically approaching 5.9% and looking like we're going sideways on core inflation, which is actually very bad news. It means that inflation could be sitting at 6% rather than dropping back down to 2% like what the Federal Reserve wants. But then we also have, you can see inflation rate, which includes oil and gas, went up to 9.1, now back down to 8.5. We're seeing that, we're seeing that core inflation is dropping. That it was. Now it's kind of slowed down. But then we're also seeing that inflation itself, including fuel and gas, is starting to drop because of oil. Are we just entering this new normal where we're going to have fuel and gas prices sitting up at 4.5? We're going to see 20-30% year-over-year increases in fuel and gas prices, where core inflation is going to sit at 6%. If that's the case, doesn't that mean that we still need to have another probably 200 or 300 total basis point hikes over the next 3 to 6 months? Do you think that we're actually going to see the Federal Reserve can drop down to 50 basis point hikes, or are we going to see a few more 75 basis point hikes? Because if we do, that's going to keep the economy in a slump for another 3 to 6 months, I'd say.
Well, I mean, I think it's important to consider the fact that anytime we've had high inflation, looking historically, the only times it's come down is when the interest rates, the Fed fund rates, have basically matched the same level, about the same level of hikes as we've had at inflation. Right now, we're sitting quite low comparatively. I think we're only sitting at 30% of where those Fed fund rates, where the inflation is as compared to where the Fed fund rate hike is right now. And so, if that were the case, that means we need to get the Fed hike up to somewhere in the 7 to 9% region. So I don't know if that's going to happen or not. It seems like our government and the Fed is they're more supportive of having a falsely inflated market than having a falsely inflated economy than having actually taking it under control. And if that's the case, that could be, whatever the term period be, whether it be 2 years, 5 years, or whatever it is, it could be good, in the interim for investing and trading. But at some point, that house of cards is going to come falling down. It's going to come crashing down because there's just so much more at stake, because it's not just, we have to remember, the U.S. needs to remember the globe isn't about the US. The US sometimes thinks it is, but we need to get this under control. And we need to also, we have to play the markets as we see them. But as it stands right now, I do think that there's high likelihood that there's going to be a few more interest rate hikes going into the end of the year. And hopefully that doesn't lead to a deflationary period, because that's the other thing people need to realize. Just because we get inflation under control doesn't mean we're going to have prices go back to originally where they were. Yeah. We have a lot of work to do. And there's a lot of balancing act that's happening right now, especially with the U.S. Having the world reserve currency, and try to consider how to balance that amongst our debt. Also with printing new $700 billion deals. There's a lot on the line right now. Not only, we haven't even mentioned a potential catastrophe happening geopolitically in Taiwan and China, where it's 80% of the world's largest trade ships basically travel their commerce through those waters. That would be another absolutely detrimental effect on the supply lines, which would then lend itself back to very high inflation again. So there's a lot riding on everything going on right now globally.
Yeah, absolutely. As I said, like we were talking about earlier, there are so many geopolitical headwinds that are starting to let up, but they could come back strong at any moment. Luckily, a lot of people in the United States, a lot of top brass in the United States believe that China is not going to invade Taiwan. That being said, that doesn't mean that's true. We don't really know what's going on in the CCP, the Chinese Communist Party, or the PLA, the People's Liberation Army over in China. We really don't know whether or not they're going to invade Taiwan or not. Tensions are at their highest since the Taiwanese Strait, the crisis in the 90s. I forget the exact name of it. There was a crisis in the 90s over Taiwan. We have not seen tensions this high since then. Japan's getting upset because some missiles landed in their EEZ, their exclusive economic zone. A lot of really important things going on in Southeast Asia that we need to watch very closely, because if we see conflict in Taiwan, it's going to have an even bigger detrimental impact on the global economy than what we saw in Ukraine, because Ukraine is a very, very important nation for agriculture, and it's a horrible humanitarian thing that's going on over there. Taiwan is a much more urbanized island than Ukraine is as a much larger nation, and Taiwan controls 80% of chip manufacturing, and as you said, the Taiwanese Strait handles well over 70% of global shipping. Would be a disaster for the global economy, much larger, economically speaking, than what we saw with Ukraine. So that could easily plummet Bitcoin down to 10K. That could easily cause the S&P 500 to drop 20-30% if that occurs. Luckily, it's probably not going to, but we don't know that yet, so we need to keep a close eye on that.
Can I make one more comment about that as well? Yesterday on Club DeFi, we have a wonderful thing that I don't know why more people don't participate in. It's called Office Hours, where we meet with groups of people that are in Club DeFi, and we go over whatever sticking points they have, or sometimes we cover new material. But we sit with anywhere from 9 to 25 people or so in there. And yesterday I brought up one of the members of Club DeFi. I brought him on stage because we were talking about inflation as well, and he runs a sugarcane field in it was either Mexico or South America. That's I can't remember. But so shout out to Jorge. And he was talking about, we're worried about the prices when we go to a store and we're starting to see food prices anywhere from 15 to 20% higher. Yeah. How is inflation 8%? I don't know. It's a lie. Yeah, but his sugarcane, the price that he gets, or the price that it basically doubled. So his inflation rate is 100%. And so if you think about like the negotiation factor there is, we see sometimes all of us, and I want to send this message to everybody out there. If you go to a restaurant and you see their prices have gone up 30%, don't bag on them and ask why they're so greedy. It's just costing. They've already been enduring lower profitability for a period of time before they make the decision to raise those prices. And even Jorge said yesterday, his sugarcane, basically the cost per 100 grams, or I forget what the measurement was, went from 12 to 24. Wow. Because it's 100% more, he's not making any more money on that, because he has to replace a field vehicle right now that those prices have gone up exorbitantly. He has to replace this. He has to cost of labor has gone up. So he's not making more money by raising those prices. And either restaurants, they've been enduring losses. And so somebody pointed out in chat, and I said it again, I said it before a few minutes ago, when the inflation comes down, it doesn't necessarily mean that we're going to be seeing lower prices anywhere. Part of it is our economy is adjusted to these higher prices, because you look at the cost of a house, 30 years ago versus a cost of a house now, it's gone up something like I don't even know what the number is, but some ridiculous number, and wages haven't gone up that much, but prices, as inflation has been at the target 2%. Well, how come all these prices have gone up so dramatically? So we need to take that into account. Now, I want to just congratulate everybody for being involved in learning about crypto and investing in crypto, because I do see this as one of those avenues out to beat the inflation rates by buying and holding.
Absolutely, and that's what I was actually getting at on my latest tweet over on Twitter. Beware of the hype train. It's a bumpy ride. Better to ride the DCA train. You'll get farther, and it's a smoother ride. And that's what I really want to kind of hammer home in this stream, and that is that, look, yes, we have some preliminary data that is indicating that the economy could be moving in a great direction, that inflation could be starting to get under control, but there's a lot of counter factors in there that you need to understand. First of all, prices are not going to go down. You would have to go through a long and very deep period of deflation in the economy for that to happen, and that would bring about its own plethora of negative consequences, where that would honestly potentially be worse for the economy than 6, 7, 8, 9% inflation, because we're used to an inflationary economy. A deflationary economy of 30, 40% over the span of 2 years would actually probably be very bad. You're never going to see a gas price down at $1.49 again like what I saw in March of 2020. You're just not going to see it unless it's for a very quick split second where oil prices go negative or something on futures again. The point is, these prices are here to stay. We're going to have to adjust to the new normal. I mean, you were talking about U.S. home prices. I just looked it up. 30 years ago, average home price in the United States was, according to this anyway, GoBanksRate.com, $121,000. As of 2022, anyway, this site says $348,000. We just bought a home for about $390,000. That's about the average in the United States, 300 to 400K, and that's what we're looking at right now.
Have wages gone up 3x in that same amount of time?
No, it doesn't. Yeah, no, exactly. They've gone up maybe 2x. You know, you look at the minimum wage is about $10 around the world, around the nation right now. It's about what, $5 back then. Wages have not gone up enough to keep up with home prices. So what you're seeing is that the poor class of the United States, you know, living in poverty, they're getting poorer, and the middle class is either getting poorer or they're getting richer, and you're seeing the middle class disappear. And you're starting to see people get fractionalized into very rich or very poor, and there's not much in the middle. That's starting to disappear, and that's because of inflation. We could talk about inflation all day. We're running out of time on the show. The point I want to make here is that this data of core inflation staying the same is what you really want to be looking at. Inflation across the board, including food and energy, is important because both of those things are really, really, really impactful for the average American. Gasoline prices can make up 5 to 10% of a family's budget, depending on how much they drive. Food prices can make up 10 to 20% of a family's budget, depending on how big they are. And how large of a house they have compared to how many people live in the home. So that's important that those numbers have gone down, but what we really need to see happen is for core inflation to continue going down, and we probably are going to see at very minimum a 50 basis point rate hike come late September, and they probably will see still, unless inflation data is really good come September 13th, we probably still will see a 75 basis point rate hike as we try and get those interest rates up to the 3.45 range instead of 2.25 to 2.5 as we're seeing right now. Kelly, tell me if you agree with this. I think the overall theme of right now is hopeful but cautious. Let's keep an eye on what's going on because Bitcoin's probably about to go through a big growth period, but we need to see a lot more confirmations in a lot of different areas over the next 3 months before we can say that for any certainty.
I completely agree. And I do want to reiterate, statistically speaking, with all the on-chain and where we're at, it is still an absolute great buy opportunity in terms of DCAing, long-term holding. For those that are trading, you need to be a sniper on the charts. You need to be glued to it. And if you're going to do that, I bid you well, but have very tight stops and be very risk averse. Like have your risk managed very well, and don't just be jumping in and out of something because the market moves.
Yeah, absolutely. You want to make sure that you are sitting in a place where you can dollar cost average and invest for the long term, guys. Don't try and outsmart the market and do a bunch of different little trades on, hey, this news is coming out, then I'm going to do this. You know, if you're very quick, you could have traded this news this morning because the numbers came out and it took about 5 or 6 minutes for the market to really start moving. So there is opportunity there. But be careful unless you're very skilled in markets. The best thing that you can do is to back up your trading portfolio, if you even do a lot of trading, with a solid foundation of investment. Take some of those funds that you have making from your job or from profits that you took and you're holding in reserves at the top, and dollar cost average is bottom, because I do think $20,000 is in the past. I'm not quite sure that we're going to see that again unless we see a big geopolitical firestorm like what we could see in Taiwan. We probably have seen, for the most part, the bottom of this market, but I think it probably will be 3 or 4 months before you start to see big big leaps forward on the chart, as you're going to need to see interest rates start coming down. You're going to need to start seeing inflation come down. You're going to need to start to see that money printer come back online. You're going to need to see the global supply chain even out a little bit. Gasoline prices get stable for 3 to 6 months, and hopefully tensions drop in the South China Sea. If you see all of these happen, including, by the way, Ethereum 2.0 launching well, then 2023 is lining up to be one of the most bullish years that Bitcoin has ever witnessed, and we could see 100K by the end of 2023. If, however, we do see conflict in the South China Sea, inflation doesn't get under control, we do need to see inflation, interest rates hike all the way up to 5, 6, 7%. 2023 could be a pretty stagnant year. Good news is bottom's probably in, or if it's not, probably not much lower, below 17K. We're sitting in bottom territory, and if you're looking to buy in for the long term, you're sitting at pretty much the best spot that you're ever going to get again. So consider dollar cost averaging at these levels. Consider holding for 2 to 5 years. I'm not talking about a 3-month trade here. Consider holding for the long term, and I think you're going to be very glad you did. Kelly, we're running out of time. Do you have any final thoughts before we wrap out with you?
Keep a level head.
Yeah.
Keep a level head. Keep exposing yourself to as many different viewpoints as you can, and see what different opportunities that might arise. And come check me out on Twitter at Kelly Kellam, KELOY I do a weekly show called Crypto Answered every Thursday. And other than that, I love you all, and let's watch these markets.
Boom. Thank you so very much, Kelly. Really appreciate you coming on the show. Guys, make sure to go follow him where he just said. T-Shroom, before we wrap out, do you have any thoughts on everything that was discussed just now?
Yeah. I came into this stream with a very potentially overly optimistic kind of tone, and Kelly and Jebb have definitely set me straight with some cautionary tales. And I'm now seeing that all over Twitter as well. So, stand by your DCAing, but don't try to FOMO in just yet. Hold by and have that buy trigger ready. But just keep on DCAing and keep staying hydrated. That's the main message.
Well, I have a parting thought.
Do you?
Yeah, guys.
Can it be stopped?
In fact, no, it can't. And that's what I was about to say. Guys, to be honest with you, you know what's the worst? You know what's worse than potential geopolitical troubles with Taiwan and Ukraine and all these things? It's really bad.
Are you sure you want to say something's worse than that?
Well,
are you sure that's the message you want to put out to the public?
I mean, in terms of
that's pretty bad.
Not worse, but
migraines.
You know something that really bothers me a lot?
Something that really grinds your gears.
Something that really grinds my gears.
Yeah.
Stoppable domains.
Oh my gosh, those are terrible.
Why would you want a domain that can be stopped? Renting a domain? Really?
I wouldn't want that.
.com, .net, .tv, gross.
Old school.
Why don't you? Yeah, exactly. That's so 90s, guys. Check out unstoppable domains. We're in the age of blockchain now, baby. And that means it's time to start plugging in the benefits of blockchain and get some unstoppable domains. So what is an unstoppable domain, you ask? Well, it's basically an NFT domain. It's a domain just like a .com, just like a .net, but you don't rent it. You own it. You buy it once. It's yours forever. And here's what's great about it. It simplifies the world of Web3 for the future. Instead of saying, hey, T-Shroom, I want you to send me some Ethereum. Here's my wallet. 1, 5, 7, Z, B, Zex, X, Y, B.
Zex?
Yeah, Zex. That's a new number. Because that's how complicated these
like
wallet
K11.
addresses are.
K11.
You could just say, hey, T-Shroom, send me some at smay.crypto.
Oh, that's a lot easier.
That's a lot easier.
Oh my
wow.
gosh, isn't that so much easier? It's like a Venmo. Boom,
Don't send
boom,
money to that. I don't think he actually has that.
I don't have that set up, so don't. Yeah. Anyways, but what I'm saying is, guys, this is how great. And look, say you're not interested in that. Well, here's what you can be interested in. Some guy bought business.crypto and sold it for 39 ETH.
Do you want to be some guy?
Yeah,
I want to be some guy.
Because guess what, guys?
60 grand.
There right now we're looking at it's like the gold rush. Like you can go in and get up all these great sought after domains,
which are unstoppable, by the way,
and that are not stoppable. They are unstoppable, and that's what people want. They want them out of you. They want them from you. So especially as Web3 grows. So go ahead and get ahead of the curve. Link in the description.
Go ahead and get your unstoppable domains now with a link in the description box down below. But we also have super chats. Do we have any super chats today?
No.
I don't actually know. I don't think we have any super chats. That's weird. Guys, we're going to read one chat. Let's find one good chat to do it. What kind of water do you have over there, T-Shroom?
Smart water.
No, you don't. You have what Diamond Sauce says, sponsored by Intelligent Water, their competitor.
Really?
Yeah.
Oh.
I mean, he said that we're sponsored by Intelligent Water. Where's the money from that? Did we get paid by Intelligent Water.
Hey,
We got paid in
Jebb,
water.
can we pull up that video real quick as a parting gift?
Yes, we can. We can pull up the
horse
video.
kicks tree,
Here we go. Here we go.
farts
This
on
is
dog
this
and
is
runs
not
away.
clickbait, guys. This is legit. Look at my screen. This is
Look
one
at
of the
this.
greatest
He's
videos
running,
we've ever seen.
Running,
Got
running,
the horse coming.
running. Boom, kicks the tree.
Kicks the tree.
Right? Look at
Yep.
this. He kicks the tree and run, run,
And then
farts on dog,
and
boom,
then
and
runs away.
runs away.
Boom. Later, dude.
Guys, that is a beautiful video.
That is YouTube in a nutshell right
Hey,
there.
guys, I just like that how honest it is.
It's so honest.
The title is
Horse kicks tree, farts on dog, then runs away, period.
yeah, and that's it.
That's pretty great.
And
Drop
that's
a
exactly
like.
what happened.
Do this to our stream, but also hit that like button right there. I think that's it for this show,
Yeah, I
guys.
think we can close
That was
it
the
now.
coup de grace right there. Guys, if you enjoyed today's show, make sure to hit the like button on both this video and the video we just showed you because they're both pretty great. I mean, come on. I don't know which one's better, but I think it's us. But either way, guys, if you enjoyed today's stream, hit the like button. We just hit 500 likes. Thank you very much. Make sure to subscribe to this channel. Follow everybody who's been on this show on all of their social media. Make sure to sign up for Lux Algo. We talked about it briefly, but it is a phenomenal technical indicator. Check out Hedge and Unstoppable Domains down below, and stay tuned because we got a lot of great content coming up today and the rest of this week. Before I go, though, guys, I do just first want to thank each and every single last one of you for watching and inflating that like button, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.